Prepare to dive deep into the world of Tesla stock forecasts with commentary from analysts and industry professionals. Regarding Tesla's potential for future growth, the outlook appears optimistic. Sandy Munro, a lifelong automotive specialist, claims that one little-known aspect of Tesla's amazing industry takeover plan has the potential to skyrocket the stock price to $1,000 per share by 2026, a forecast that many investors are closely following. But is the massive manufacturer of electric vehicles able to achieve this? We'll dissect the data and investigate the variables that could affect Tesla's growth trajectory in this video. So take a seat back, unwind, and let's see if Tesla can achieve its 2026 stock price target of $1,000 per share. First things first, though, make sure you subscribe to Wall Street Games and don't forget to hit the like button. Now let's get started. Sandy Munro believes that within 3 years, the price of a share of Tesla stock might reach $1,000. Given that I anticipate the share price to reach $1,400 by the end of 2023, the outlook is optimistic. So it would be like Christmas coming early if Tesla stock hits $1,000 per share by 2026. The stock is already trading in the lower 200s to higher 100s, indicating that 2022 has already gone, according to the Tesla stock price prediction chart for 2026. With over 1.3 million car deliveries, the overall net income revenue was substantial, and the EPS was approximately $4.07. We expect much more increase between 2023 and 2026. 1.858 million automobiles were delivered in 2023 alone. Check out our video from the first quarter of 2023, where we break down the deliveries and output for the year to see how we arrived at this figure. By 2026, we anticipate about 5.1 million car sales, assuming a 40% annual growth rate. The average selling price will be $50,000 in 2023, $51,000 in 2024 due to the Cybertruck, and $50,000 in 2025. A tiny car could be introduced in 2026 and sold for about $49,000 per unit. It might be built on a greater scale. Additionally, we estimated each vehicle's operating margin for 2023, putting it at 14.5%, while recent price reductions could lower it to 13% or 12%. We anticipate a modest increase in the operating margin in the upcoming years, with a target of 16% to 17% to 18% by 2026. Lastly, we took into account the credits and earnings from the vehicles, together with the one-time cost for autonomous driving. It is anticipated that beginning in 2024, 2025, and 2026, this charge will rise by $2,000 annually. It is realistic to anticipate an annual increase moving ahead, as this charge was raised from $8,000 in 2020 to $15,000 in 2022. Though it may appear lofty, Sandy Munro's forecast of $1,000 per share by 2026 is very definitely attainable. We can see how it's possible to accomplish this aim by taking into account the numbers and several elements that could affect Tesla's growth. Nevertheless, before making any investing selections, it's crucial to constantly conduct due diligence. We must examine the data in order to comprehend the prospective rise in Tesla's revenue. 1.858 million Tesla cars had been delivered as of 2023, and 279,000 of those owners had chosen to pay a one-time price of $2,000 per share increase for self-driving FSD. This corresponds to a 15% FSD opt-in rate. Nevertheless, we lack information regarding the number of clients who are paying the $200 monthly subscription charge. It is possible to determine the total revenue for SSD and vehicle sales, which will rise by 2% a year, using a conservative assumption of a 15% opt-in rate. By 2026, Tesla's energy profit could range from $12 to $15 billion, with an annual growth rate of almost 450%. When currency charges are taken into account, the net income for each year approaches $1.5 billion, translating into total revenue over $100 billion. Earnings per share, EPS, is expected to reach $4.92 in 2023 and continue to rise annually through 2026. With an operating margin of 16%, there is cause for optimism in 2024. An EPS of $7.84 is reasonable. There are a number of reasons to trust my forecast, despite the fact that some may find it unduly optimistic. First off, we might not be in a recession or bear market. Furthermore, economies of scale will continue to be advantageous for Tesla. After dissecting the fundamentals, the next step is to calculate the price to earnings, P/E ratio, which will yield the stock price. It is noteworthy that the number of outstanding shares of Tesla is decreasing annually by 2%. A P/E of 60 by the end of 2023 is conceivable, translating into a $295 per share stock price and a valuation of about $1 trillion. In 2024, if it proves to be a prosperous year, we might witness even higher growth. Although Tesla has a large potential for revenue growth, it's crucial to take inflation, operating margin, and outstanding shares into account. Although there are good reasons to be positive about the future, it's crucial to maintain perspective and take all the factors into account. We point out that if Tesla had a P/E of 60, its total revenue would have approached $300 billion, and its net income would have exceeded $57 billion. Although they admit that this seems absurd and crazy, they also point out that if Tesla keeps growing at a pace of more than 30%, it might actually happen. They imply that in order for Tesla to keep growing at this rate, it would require additional revenue streams, including as electricity. To make the P/E more reasonable, we think Tesla could boost car deliveries. They speculate that Sandy Munro's projection of $1,000 per share in the future might be an attempt to calculate this. We observe that if Tesla is expanding at a 40%, 50%, or 60% annual rate, then something must be going on with the company. Although we are aware of the difficulties that lie ahead, we are generally still positive about the future stock values of Tesla. Together, let's do some math and examine Tesla's development throughout time. About 500,000 Tesla vehicles were delivered in 2020, and Elon Musk announced that the company intends to grow at a 50% annual rate. Based on our calculations, they should have delivered about 750,000 automobiles in 2021. Nonetheless, they delivered 936,000 vehicles, or nearly a million of them. In 2022, they should have delivered over 1.1 million automobiles, but they only delivered 1.3 million even after applying an additional 50% growth rate. If we maintain a 50% growth rate, they should supply little less than 1.7 million vehicles by 2023, but our prediction is that they will deliver over 1.8 million. It will be difficult for Tesla to meet their 2023 delivery target of 1.8 million cars, but we'll have to wait and see how they fare. With an additional 50% growth rate, they should supply slightly more than 2.6 million cars by 2024. Although we still estimate that they will produce roughly 100,000 more automobiles, the difference is narrowing. Looking even further ahead to 2025, we estimate that they will deliver 3.6 million automobiles, but if we maintain a 50% growth rate, they should produce about 3.8 million vehicles. By 2026, if we assume a 50% growth rate, they need to supply over 5.7 million vehicles. Now let's substitute the stock price for these figures. By 2023, the stock price would be $718 per share, with a 60 P/E ratio after 3.789 million vehicles were delivered. By 2024, the stock price would have increased by 40% year over year to $1,114 a share, with 5.683 million vehicles delivered. By 2026, they must have a 54 P/E ratio in order to hit its target stock price of $1,000 per share. A 50 to 60 P/E ratio is doable given Tesla's anticipated growth, and if FSD, full self-driving, is regulated and generally accessible by then, a 56 P/E ratio would be deemed inexpensive for the company. Every year, Tesla reduces the number of outstanding shares by 2%, which may have a long-term impact on the stock price. However, there's a chance of a buyback that would lower the number of outstanding shares and raise the stock price if Tesla makes between $50 and $60 billion by 2026. Long term, Tesla has a bright future, despite the uncertainty surrounding the near term. In terms of energy, FSD, and total renewable energy, no one compares.